Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. Now we're going to talk about a couple of European ETFs that you might find interesting with our ETF research director, Nina Mishra, who joins me. It's been a while since
it has been.
delved into the ETF space.
Yeah.
You've got a couple of European hedged ETFs.
Yes.
And this is particularly interesting in light of the recent ECB rate cut that was in the news.
And the dollar move.
And the dollar move,
So let's begin with the ECB. So last week, ECB surprised the markets with another rate cut. And that took their lending rates to another record low. And they also announced a program to purchase asset-backed securities and covered bonds. Now that those purchases, they are not, you can call them, they are a lighter version of QE. So they still have the option of purchasing treasury bonds later if these measures do not work. Now these measures are targeted at increasing bank lending and reducing the threat of deflation in the region. And overall these measures show that the ECB is committed to doing whatever they can to put the region back on the growth path. So with these moves, some money is likely to flow into European equities. And overall, these European stocks, they look a bit cheaper compared to the US stocks, because with 5.5 years of bull runs, most of the US stocks look a bit expensive. So compared to US stocks, European stocks are a bit cheap compared to their historical levels. So they are worth a look at this point of time.
We also have, as you mentioned a moment ago, a stronger U.S. dollar and an outlook for the euro that's not so good.
In fact, this week, the dollar touched a 14-month high against a basket of major currencies. And dollar is expected to continue to be strong because of the perceived, divergence in these monetary policies. Because the Fed has already, the Fed has been tapering the QE program, and they are expected to start raising the interest rates sometime in near future, sometime next year. On the other hand, the Eurozone, they still have the dovish monetary policies. Japan still has dovish monetary policies. So they are expected to increase easing in those regions. So with that divergence in monetary policy, the dollar may continue to be strong going forward. So that is one aspect to consider when you are investing internationally. If the dollar remains strong and the euro weakens, then that is going to hurt your European stock investments. And overall, these currency moves are difficult to predict in the long term. And for investors who do not want currency-related volatility, it makes sense to look at these hedged ETFs, which provide exposure to stock markets while taking out the currency risk component.
Interesting. Now you've got a couple of examples that you brought with you.
Yes. So the first pick that I have is from WisdomTree, the WisdomTree Hedged Europe ETF. The ticker is HEDJ. It invests in large dividend-paying Eurozone companies. The criteria is that the market cap should be at least $1 billion, and they should derive at least 50% of their revenues from outside of Europe. So these are mainly large export-oriented companies like Anheuser-Busch, Siemens, Unilever. They are among the top holdings. And the ETF, it weights its holdings based on dividend. It's not a market cap weighted ETF, so it focuses on the quality companies. Has 124 holdings, expense ratio of 58 basis points, and has a nice dividend yield of 1.8%.
And another one that you brought with you.
Yeah, that's from Deutsche Bank. It's Xtrackers Europe Hedged ETF. DBEU is the ticker, and it is more diversified, has more holdings than the earlier one, more than 400 holdings. And this ETF is suitable for investors who are looking for a broader Europe exposure, not just the Euro currency zone exposure, because this has a significant exposure to UK and Switzerland as well.
Oh.
Now we know that UK economy has been doing well. UK has been rising faster than most other developed economies. So if investors want to have some exposure to UK and the Eurozone as well, then probably this is a nice pick. And of course it hedges out the currency risk. Slightly cheaper, has an expense ratio of 45 basis point, and dividend yield is also higher, 1.9%.
Okay, do you own either of these two?
I don't.
All right, well thank you for that. And if you're watching this out in syndication land, you need to get over to our website, zacks.com, because in the ETF section of the website, you'll find a lot more interesting information and articles pertaining to various aspects of ETF investing and the ETF space, penned by Nina herself, some of them as a matter of fact. With Nina, I'm Terry Ruffalo.